Opened up 5 points, thank heavens. Ashley Webster is here, Liz McDonald joining us too, Scott Shellady, and look who's here, Jeff Sica.
We found it.
We are 2,000 points higher than where we were at the lows of January. So I'm going to start with Perma Bear, Jeff Sica. We've not seen you around, but we put your face and name on a milk carton. You've kind of gone missing.
Fantastic.
So are you sticking with your bearish point of view?
There it is. I'm going to be the first to admit it has been a lonely 45 days trying to find other bears that are going to actually talk to me. People expect me to be in hiding. But what I will say, and you have to pay investors have to pay very close attention as to exactly what changed in this market. Virtually nothing has changed with corporate earnings. What we've had was three major central banks launch this desperation of money printing, low interest rates, negative interest rates. Sure. So what we've seen is not only are these central banks willing to jeopardize the future economies of their respective countries, but they are willing to do just about anything to cover whatever they're trying to cover and save this market, and I find that very problematic.
Okay, so there's still a huge problem bubbling away under the surface, and it comes to the surface much later.
Yeah, and the problem is what they're doing is they're delaying the inevitable. Remember, the Fed came out and they said when they were starting to raise interest rates, maybe get some sanity back. They came out and they said that raising interest rates was good for us, that we were at normalization. Now, Janet Yellen comes out and clearly dovish, clearly against raising interest rates, and now she's telling us that not raising interest rates is good for us. This is a very confused Fed, and when you have a confused Fed, eventually you're going to realize they don't know what they're doing.
I think the market, investors and everyone is confused right now, to be honest with you.
By the way, the S&P 500 just turned positive for the year, calendar year 2016. But welcome back, Sica. Welcome back, young man. I want to move on to oil because I think that may be playing a role in the stock market move this morning. We're at 40.88. We had been at 41, just above it. Scott Shellady, do you think maybe we've got a new bottom? $40 a barrel? Is that the new bottom? Maybe. What do you think?
No, I think we've gone through my $40 level just a bit here, but I think that ultimately we've squeezed some shorts out of the market, number one. But more to Jeff's point is, we've got this dollar here that got a little weaker after what the FOMC had to say, or Janet had to say on Wednesday. And to his point, I want to go one step further and make it clearer for everybody. When all these central banks, especially the ECB and Bank of Japan, embarking on these negative interest rate policies to try to import inflation and weaken their currencies, the Fed taking 2 of those 4 rate hikes off the table, in essence, weakened the dollar because it was higher because of the expectation of more rate hikes. By weakening that dollar, it just undoes all of the work that those other central banks are doing to weaken their currencies. By default, they've gotten stronger. That's the real story, Stuart. Watch how this plays out, because it's going to unwind, and it's going to unwind badly.
Okay, we hear you. We hear Jeff Sica. You make a lot of sense. You know what you're talking about. That's a fact. But I want to bring in EMAC. Stop laughing. You do know what you're talking about, Scott. You really do. What's this from? Is this from Goldman Sachs? That they're saying green shoots for the oil market?
Yeah,
Liz?
they're saying essentially starting in the third quarter, you're going to see oil continue to rise higher. Why?
Well, okay, not until the fall.
Yeah, that's correct. Thank you. And why? It's because of U.S. oil production. This is a case for why we want to get off Mideast oil. They're saying U.S. oil production is so important. They're seeing that U.S. oil production is going to be down 830,000 barrels a day. That's a 250,000 higher than Goldman Sachs estimated. Watch this. The International Energy Agency said, the OPEC talk of capping prices? They're saying, you know what, that doesn't even measure up to the decline in U.S. production. U.S. declines in production matters more than anything OPEC does in capping prices. So
tightening of supply demand, so stock prices go up in the fall a bit more from where they are now.
So they're talking $40 stays.
All right, I want to get to those big-name tech stocks that we talked about. every day, of course. Now, one investment firm says they're on sale. These three stocks, that would be Google, Apple, Facebook. Big investment firm says these are cheap, they're on sale?
These are cheap, says BMO Capital Markets. They say you've got to have these stocks in your portfolio. Solid earnings outlook, cheap valuations, generally favorable situation. And they say, look, yes, these particular stocks and the tech sector in general have struggled this year. Why? Because they were the standouts in 2015, and in a difficult market, people have been taking profits, and that, they believe, has made these very attractive. Facebook, they say, has become a safe haven.
That's interesting.
Okay, by the way, the Dow Industrials right now are at a new high for 2016. That will be 17,540. The all-time high came last year. I believe it was 18,351, something like that. So we're roughly 600 points away from the all-time high, 700 maybe. Play the music, please. You know what that means. Death Watch for Aeropostale. What's going on with...